If you are wondering what all the hype around Rocket Company's RKT stock is, then this is the video for you. I'm going to explain exactly what this company does. I'm going to explain what makes them so appealing as an investment. And I'm going to also share with you what my personal thoughts are on this company as an investment. Rocket Company stock went public just a few weeks ago under the ticker symbol RKT and has seen some extreme volatility. But as of today, the stock is up just over 20% from when it started trading. What does Rocket Companies do? What do their financials look like? And most importantly, is this a good potential investment? These are the questions I'm going to be answering in today's video, guys, and this was a highly requested subscriber video. So if you appreciate the time and effort put into this video, all I ask in return is to hit that like button down below to show your support for the channel. So thank you for that. But either way, let's get into it. So what does Rocket Companies do? They claim to enable home ownership and financial freedom by providing simple, fast, and trusted digital solutions for complex transactions. The Rocket Companies brand owns a bunch of sub-brands like their flagship service, Rocket Mortgage, which is designed to make the mortgage process simple and efficient for consumers. But along with Rocket Mortgage, they have a few different verticals that they are in, with a big brand name called Quicken Loans under their ownership, which has a lot of staying power when it comes to finances amongst consumers. So this is a very interesting company here, a pretty diversified business as well with all these brands underneath it. And if you want to learn more about any of their sub-brands, just pause the video here, do a quick Google search on any of these names, and you will get a good amount of information to help you understand these businesses. Now, Rocket provides a simple overview here of why you and I should consider investing in this company today now that it's public. They are in a market that has accelerating market opportunity. They've built an unparalleled digital-first brand. They are what you would call a disruptive company with their constant innovation focus, and the growth prospects for them is massive, making it appealing to high growth investors as well. Here are some key metrics that they provide. In the first half of 2020, they had $124 billion of mortgage originations and brought in $6.4 billion in net revenue. And guys, this is no small company, as they currently employ around 20,000 people across their business segments. In fact, their current market share sits at nearly 7%, and this has been increasing steadily over time, but really saw a big boost in 2019. And as you may know, the housing market is actually quite hot here in 2020 for many markets. So with a business like this, with a focus on technology, customer experience, and simplicity, I wouldn't be surprised to see them approach close to a 10% market share in the near future, which would be huge for them. Now, I know that many people, especially millennials, want a technology-first approach to everything, and that includes mortgages. But when you look at the traditional mortgage industry with banks, it's a tedious process. It's slow, it's not transparent, and more often than not, consumers are not left happy with the overall experience. This industry has seen little to no disruption in many, many decades, which is where Rocket Companies comes in here with their Rocket Mortgage and tries to change things up. Now, it's not going to be easy because they are fighting against some of the largest, most powerful companies in the world, the US banks. But if they are able to execute properly and keep their customers happy, that is going to be a deciding factor for this company going forward. So far, based on their retention rate, they are absolutely destroying the industry average with a 76% refinancing retention rate with customers versus the industry average of, get this, 22%. So clearly customers tend to be happy with their service and want to stick with them when they go and refinance. And I think part of their success is their all-round approach to this market. There's really two sides to buying a house, right? First, you got to actually look for the house, and then you got to go and apply for a mortgage to buy the house. And well, Rocket has a service for this as well with Rocket Homes, where it competes with Zillow or Redfin to help you find your next home. And what they've done is integrate Rocket Mortgage right into this and making it seamless to browse, choose, and apply for a mortgage all through the Rocket umbrella. So I mean, so far this sounds really good, but there's one thing that kind of has me scratching my head a little bit about the approach that this company is taking. I feel that things are a little bit rushed when it comes to this company going public. Now, I think this is probably because they want to capitalize on the booming housing market that's happening right now, but we won't really know the real reasons. Of course, they're going to say that, it's a good time for them to go public, they see good things in the market for them to go public, all this kind of stuff. You don't really know their ulterior motive behind it, but I think just based on what I've seen, It's probably because there's so much hype right now with all these IPOs and the housing market, so it's kind of a perfect storm for them. What I did find a bit odd though was that prior to going public, they went ahead and posted their Q2 earnings numbers early, probably to add some excitement around the company and the stock, so that when it does finally trade, there's a lot of hype and optimism that pushes the stock price higher. That being said, look at the numbers that they actually posted here. Their closed loan origination volume was $72.3 billion, which increased 40% versus Q1 2020 and 126% versus Q2 2019. Net revenue was $5 billion, which was an increase of 437% year over year. And finally, net income was $3.5 billion, which compares to $54 million in Q2 2019. Clearly, with the growth they've seen here in Q2, it's no surprise that they wanted investors to know about this as they went public, in hopes that hype would really build up. Investors would be very optimistic on the stock. It would gain popularity with, the Robinhood crowd there, and all of this would result in hopefully the stock price moving much higher. Now, this did help initially as the stock did run up for the first few days, but then it cooled off and sold off a little bit as people took profits. But it has since recovered once again and making new all-time highs once again. And as of recording this video, it sits at a whopping $51 billion market cap. $51 billion for a market cap is no joke. This is a pretty sizable business. To give you an idea of how big this company is bigger than Chipotle. This company is bigger than eBay. This company is pretty much on par, around the same size as Uber. So this is a pretty large company, guys. But I mean, $51 billion market cap, yeah, that's great. It's a big, large, giant out there. But does their fundamentals actually justify this valuation? Well, as of today, the company has around $21.3 billion in total assets, which is sizable, and $2.2 billion of that is in cash. And the majority of their assets are actually in mortgage loans held for sale at fair value, sitting at $12.8 billion. On the liabilities front, they do hold quite a bit at $17.6 billion, but their assets still cover this fairly comfortably. They do have some money pulled out of line of credits and senior notes, probably to take advantage of the low rate environment we're currently in, but that's something to keep an eye on moving forward to make sure that that remains relatively low and manageable. So I would say overall their balance sheet is okay. It's not great, but it's not bad either. It's just okay in my eyes and doesn't convince me either way to invest in this company or not. Alright, so now we have pretty much the main information we need. We understand this business, we understand what they do, we understand the value they provide, we understand their fundamentals. So is this a good investment? So I mean, looking at this company from a high level, I think this is a very interesting company and industry that they're going after. It's a high growth company, it's a disruptive company, and they are doing things right to keep consumers coming back and, have positive overall customer experience. I think that's extremely important here, because if they're able to win a customer for life, that's going to be one less customer that their competition is going to be able to take hold of. It seems that what they're doing is great, but personally I have never used their product, so I can't really speak from that perspective, but the general sentiment seems to be good here, which is what I'm happy to see. But on the flip side, I did mention this, I am a little bit skeptical here as to why they rushed their public, debut here on the market, why they really wanted to go public right now in the middle of everything going on. And really all signs really point me to the fact that the company feels this is the best time for them to get a very high value. So over time, it's quite possible that we see the stock trend lower. Yes, in the short term, volatility kicks in, things could run up much, much higher. But that's probably what they're hoping for, because we've seen this time and time again with a ton of recent IPOs. But that being said, despite my skepticism, this is a very interesting company. And also something I found kind of contradicts my skepticism here, which is that insiders are actually buying this stock right now, which signals to me that, maybe they actually do truly believe this company is undervalued and they do want investors like you and me to take advantage of the current prices. Insiders are buying shares in this company by the millions over the last few weeks as they went public. And you know what, guys? Maybe they see a very strong outlook for the stock here, at least for the next few quarters, which is why they're buying a ton of shares here, which could mean big returns for this investment in years to come. And honestly, I'll say this. I went into this research really for this stock, thinking that it's probably like one of these other hype stocks that have come up in the last few months, with poor fundamentals, poor execution, just running on hype, don't really see a great future for it. It's just all on hope and, maybe they can do this, maybe they can do that. There's nothing really of substance there. But with Rocket, you know what, it's different. They're a well-established company, large business. They have their plan in place. They are executing. They are making money. They are growing. All the metrics seem to tell me that this may be a very good investment. Also, I guess the most exciting part here is that they're disrupting a dinosaur industry. And when we have companies come in that's kind of going against the grain, disrupting an industry that has huge potential, it typically gains a lot of attention in the media, gains a lot of attention with younger investors like us, and that could result in the stock moving much higher from where it is today. So I'll say this, while I don't hold any shares of Rocket, as of recording this video, I am very interested in this company, and I am going to be doing a lot more research into this company to understand the business better. They have a lot of verticals and they have a lot of sub-brands that they own. And for me to actually comfortably invest in this company, I have to properly understand those sub-brands and really be okay with this stock pulling back 50, 60% if that does happen. With these IPOs, you never know. Things can move up and down very, very extremely and violently, and you have to be ready to ride that wave if you believe in the company. And as of right now, you know what? I'm heading in the right direction. I'm heading towards investing in this stock possibly, but I'm not there yet. I need to understand it better. I need to be comfortable. I need to be 100% on board. And if I get there, that's when I will be buying a ton of shares. Now, I know a lot of you guys have been buying the stock recently, so let me know in the comment section down below, what your cost basis is, what your bullish outlook is on this company. I'd love to hear from you guys in the comment section below. And I also do want to add that I have no fears, guys, of this company going under, bankrupt, anything like that. They have a strong business, okay balance sheet, tons of assets on there as well. So no fear with that of you losing your entire investment. However, what you do need to keep note of here is that growth potential for this company. It's moving really on that high growth that they've, pre-released here for Q2. Investors are probably expecting that growth to continue into Q3, Q4, and forward. So if there's any signs of that slowing down, or if this was just a one-time thing, that's when you could see a significant pullback in the stock. So guys, that's kind of my thoughts here on Rocket Companies, RKT stock, and I want to hear in the comment section down below what your views are on this company. Are you bullish? Are you bearish? Neutral? Did you buy shares in this IPO? Let me know in the comment section down below. I really am leaning towards investing in this company, but like I said, I'm not there yet. I may get there soon. If you guys want to see an update video, if I buy shares, let me know in the comment section down below. Either way, guys, thank you so much for watching. Hope you enjoyed this video. Don't forget to invest positively, and I'll see you in the next one. Peace.